Welcome back to Investing Talk Podcast. Today we're looking at HIVE digital technologies. The big question is now a potentially good time to think about buying this stock? We're basing this purely on the operational data, the financials, and the catalysts coming up that we found in the sources. And hey, before we jump in, if you like this kind of analysis, please do subscribe, like the video, comment below, let us know what you think. Also really important, if there's a specific company you want us to look into next time, just leave a comment. We genuinely love tackling your requests.
Yeah, absolutely. And HIVE is an interesting one. We're looking at a company that's, navigating the really volatile crypto mining world, but also they seem to be making a pretty strategic, serious pivot into performance computing. The sources definitely show some significant momentum. There's a lot of buzz, but our job today is really to check if the fundamentals actually back that up or if it's maybe just market excitement.
Okay, let's start with that operational story then. HIVE seems to have shown some serious growth recently, mainly expanding capacity, getting more efficient. What really stood out from, say, August through October?
Well, what's fascinating here, I think, is that the growth isn't just about getting bigger. It seems focused on doing it smartly, efficiently. So back in August, HIVE reported a 22% increase in Bitcoin production. They mined 247 BTC. And this was driven by new machines coming online at their facility down in Paraguay, Valenzuela.
Right, 22% is a strong start. You mentioned efficiency, though. How do we actually measure that in this kind of business?
Yeah, good question. The key metric is joules per terahash, or JTH. It basically measures how much energy you use for a certain amount of computing power. And crucially, their fleet efficiency hit 18.5 JTH. Now, just to give you some context, anything under 20 JTH is generally seen as, pretty cutting edge. It implies they're using low-cost power effectively, which is absolutely critical if you want to survive the ups and downs in this sector.
Okay, so they're expanding and becoming cheaper to operate at the same time. That's interesting. Did that momentum keep going into the fall?
Absolutely. Yeah, by September, they had significantly boosted their capacity. They pushed past 21 exahash per second, EHS as it's called. Now, that represents a huge 138% increase year over year in their production capacity. Huge jump. They mined 267 Bitcoin that month. That was another 8% increase just from August. So yeah, it's clear they're really pushing hard on their deployment schedule.
And then October. That seemed to bring not just a market reaction, but also that first big strategic step towards this new identity they're building.
That's exactly right. The stock surged 15.51% in October. Now, part of that was just general optimism in the crypto market, sure. But the main driver, flagged by analysts, was a strategic move. They acquired a data center specifically meant for AI workloads. This is really the first sort of tangible, physical sign that they are genuinely trying to diversify beyond just mining crypto. We also saw some news about strategic discussions with Roth Capital, which kind of hints at potential future institutional partnerships or deals.
Sounds like a company really trying to pivot. That efficiency is impressive. But the big question always comes back to money, right? Is this translating into actual reliable cash flow?
Yeah.
Let's look at the fundamentals. What really aligns HIV's financial health, especially when you compare them to others in the space?
Right. And if we connect this operational performance to the bigger picture, the financials are surprisingly strong for the sector, honestly. We see clear evidence of really solid capital management. If you look at the trailing 12 months, the TTM figures, revenue is $128.65 million. And get this, net income is $50.31 million.
Whoa, hang on a second. $50 million net income on about $128 million revenue. Quick math. That's a net profit margin over 39%. 39%. That seems incredibly high for an industry known for tight margins and huge power costs.
Yeah.
How are they sustaining that?
Yeah, that's the key question the sources dig into. And their ability to keep that 39% margin seems to come directly from their main competitive advantage, access to cheap, green, high-performance power. This is really the first pillar of their moat, so to speak. Their focus on green energy data centers, specifically mentioned in places like Bermuda, Paraguay. It significantly cuts down on power cost volatility, and that's what lets them capture that really exceptional margin.
Okay, so exceptional profitability driven by cheap green power. What about valuation then? Does the market actually recognize this underlying strength, or is it still viewed just as a minor?
Well, not entirely, it seems. The TTM earnings per share is $0.34. The trailing PE ratio sits at 16.23. Now, analysts look at that PE and think it's actually quite reasonable, especially given the growth they're projecting. But the really eye-opening part comes when you look at valuation relative to their actual mining capacity. This brings us to their third key competitive advantage, according to the sources. It's a highly favorable valuation metric. HIVE trades at about $32 million per deployed exahash of capacity.
Okay, I got to stop you there. $32 million per exahash. You're saying the peer average is around $115 million.
That's right.
So HIVE is trading at, what, nearly 70% less than its peers on that metric. That sounds almost broken. What's the market missing? Why the huge discount?
It strongly suggests the market is deeply discounting HIVE, probably because of its history as, purely a crypto miner. It really looks like the market isn't fully pricing in their current operational efficiency, that 39% margin we talked about, and maybe more importantly, this credible physical pivot towards AI and performance computing. They haven't given them credit for that yet, it seems.
Right, which makes that detail about their expansion plan being paid for even more critical, doesn't it?
Yeah.
If they want to be seen more like a data center company, they can't be loaded up with debt.
Precisely. That's their second key edge. Unleveraged growth. They're aiming to hit 18 EHs by the end of November 2025. That's the target. And critically, the sources emphasize this. All the required mining rigs for that goal are already paid for, bought and paid for. This shows, tremendous capital discipline. It effectively removes that near-term debt risk that just plagues so many competitors who have to keep raising equity or taking loans to fund their growth. This whole strategy makes them look much more like a mature, fiscally responsible tech operator than your typical volatile mining company.
That clarity on expansion and how they're funding it gives you, the listener, some really defined milestones to watch. So let's talk timing. What are the actual events coming up soon that could really move the stock price? What dates should people circle on their calendars?
Yeah, we have some concrete dates and targets here that could definitely act as market catalyst. First up, you've got the upcoming Q3 earnings report. That's expected around October 15th. And then looking a bit further out, the Q2 2026 results are scheduled for November 12th, 2025. Now, the expectation for both of these reports is that they'll show continued year-over-year growth in production, and crucially, that those strong margins, that 39%, are holding steady. That's what the market will be watching.
That operationally, that hash rate target is the big one.
Yes. The completion of their Phase 3 expansion, actually reaching that 18 EHs target, and having it operational by the end of November 2025,
Right.
That's a very defined short-term potential boost. If they hit that target cleanly, on time, it should trigger a positive market reaction, especially given that low relative valuation we just discussed. Beyond just HIV's own news, you should also keep an eye on broader market, things like ETF rebalancing events, and any signs of continued interest from institutional buyers. Those are expected drivers for the whole sector.
Okay. And what about the pure trading side? If we set fundamentals aside for just a moment, what are the technical charts telling us?
Well, technically, the momentum looks extremely positive right now. It kind of confirms the enthusiasm we're seeing in the operational data. The recent price, when this data was pulled, was $5.57. That marked a huge 25.17% gain on the last trading day. That shows abnormal strength, suggests a near-term breakout on significant volume. And furthermore, the stock is trading quite healthily above both its 50-day and 200-day moving averages. Now, for traders, that's a classic, pretty powerful bullish confirmation signal. It suggests the underlying trend is up.
So if this momentum holds, the upside targets look pretty attractive.
Absolutely. The analysis suggests support levels are holding firm, sort of in the $4.70 to $5 range, and the upside resistance targets, they're quite aggressive, ranging from about $6.80 up to potentially $8.10, projected for the final quarter of 2025, if they keep this trajectory and hit those operational milestones we talked about.
Okay. And we also have some, let's say, speculation floating around. Stuff that isn't hard data yet, but, could definitely move the needle. What are the key rumors or speculative points?
Right, the speculative catalysts. Well, there's always the anticipation of a broad Bitcoin price rally. That tends to lift all boats in this sector. There are also some rumors about HIVE potentially expanding into new geographic markets, which could further strengthen their green energy advantage if they find more cheap power sources. And finally, given that low valuation, there's quite a bit of speculative chatter about potential M&A mergers or acquisitions. That could mean either HIVE acquiring smaller, maybe higher-cost competitors, or potentially HIVE itself becoming a takeover target. Either scenario could, in theory, unlock that deep valuation discount pretty quickly.
Right. As always, though, we need the balanced view. Before we wrap up with the consensus, what are the main risks here? What could derail this otherwise pretty bullish-looking story? We need to stress test this idea.
Yeah. Definitely need to talk risks. The primary risk, and this applies to almost any company tied to crypto, is just sector volatility. It's inherent. So HIVE remains highly exposed to really three big unpredictable forces. One, big swings in Bitcoin and other crypto prices. Two, regulatory changes. Governments could crack down on digital mining globally. And three, unexpected jumps in power costs, even with their focus on green power. Contracts can change, things can happen.
Okay, so how is management and their current strategy actually trying to manage that built-in sector risk? Because we all know the moment Bitcoin takes a dive, these stocks usually follow. It doesn't matter how well they're run operationally.
Right. And their strategy seems explicitly designed to mitigate exactly that. First, by focusing on having those paid-for rigs, they reduce their cash outflow needs during crypto downturns. They don't have big financing payments due when revenue drops. Second, that move towards cheap green energy helps shield that 39% margin much better than competitors who are exposed to fluctuating fossil fuel prices, for example. But maybe most crucially, that pivot towards non-Bitcoin performance computing, like AI workloads, that's an attempt to build an entirely new revenue stream, one that isn't directly tied to the price of Bitcoin or any single digital asset. They're really trying to build a second pillar, to support their valuation independent of crypto prices.
Okay, so overall, when you weigh those pretty significant competitive advantages, that 39% margin, the paid-for growth against the inherent risks, what's the analyst's consensus and what's the final investment thesis that comes out of all this material?
Well, the sentiment looking across the sources is overwhelmingly positive. Wall Street analysts show a strong buy consensus rating, and the high price target estimate reaches $11. That's, nearly double the recent trading price we mentioned. Retail sentiment seems to mirror this positive outlook too, likely driven by that clear technical breakout and, of course, that super low valuation per exahash compared to peers. So the bottom line investment thesis presented is highly bullish. It gets a rating of 9 out of 10. And that rating is driven by a combination of factors. Rapid earnings growth, that strikingly low relative valuation per EH, the recent technical breakout confirming momentum, and importantly, multiple near-term catalysts coming up, especially around November with earnings and that hash rate milestone. The sources actually suggest HIVE could be interesting for both short-term trading leading into those November events and for long-term investment based on that strategic expansion plan and its sustainable, essentially debt-free positioning for growth.
So to kind of circle back and answer our main question, based purely on these sources, HIVE Digital Technologies really does seem to be at a pretty critical inflection point right now.
Yeah.
You've got clear operational excellence colliding with this strategic diversification effort, and it's all backed by, frankly, exceptionally strong fundamentals and those very clear paid-for expansion targets.
Yeah, and I think the key takeaway for you, the listener, is really understanding that the name change back in July 2023, moving from HIVE blockchain to HIVE Digital Technologies, wasn't just cosmetic. It signals a really fundamental long-term strategic shift. It's a clear attempt to decouple the company's valuation from the pure, and let's face it, often brutal volatility of Bitcoin mining. They want the market to recognize the value of the physical infrastructure they own and operate.
And here's where I think it gets really interesting, the kind of final thought to leave you with. Given that analysts are valuing HIVE so far below its peers on that hash rate basis, that weirdly low $32 million per exahash number, what happens if the company successfully executes this pivot? If they build out that AI and performance computing business using that capacity that's already paid for, could the market finally re-rate this stock? Could they stop thinking of it as just a volatile miner and start valuing it more like a tech data center operator, like some of those high-flying infrastructure companies we see today? That, I think, is the billion-dollar question you should be mulling over as you watch those November reports roll in and see if they hit that crucial 18 EHs milestone. Thank you so much for joining us for this exploration of the sources on HIVE. We'll be back soon with more insights.